Hey everyone, today we're in Huntington Beach to talk about the coastal multifamily market here in Southern California. And today we have Mike O'Neill with us, who leads the coastal multifamily practice for our team. So Mike, thanks for being here and to talk about the market.
Glad to be here, Dan. Well, right now for the coastal multifamily, we're seeing that to be the premier properties that investors are looking to buy, right? They want to have pride of ownership, near where they live, premier rents. And at this time, we have various listings, properties in escrows, and we just closed a couple of deals too.
That's great. And we've had a lot of really good activity, but I think what a lot of folks are going to want to know is, like, with just all the changes right now today, we're in Q4, like what is going on today that investors need to know about?
Right, so obviously we all know about the interest rates, right? They're high and the cap rates on the coastal markets are relatively low. That being said, there's always appreciation on the coastal markets, and then there continues to be some rent growth as well. So, and then if you look at, like, if there's going to be a recession in 6-12 months, whatever that may or may not be, here in the coastal markets, we're able to sustain that, and we're also able to, during that time, to have a low vacancy rate.
Got it. So it's more or less like, are you seeing it as like a flight to quality?
Right.
Investors are still a strong demand for the coastal markets?
Yeah, it's a safe haven, right? Like, people always want to own near the coast. And I mean, due to the tenant base, and then also their properties are in fairly good condition too.
So what about offer activity for the properties we have listed up and down the coast, anywhere from LA County, Orange County, beach cities? What's offer activity like right now?
Well, we have a 7-unit listing in Balboa Peninsula. We have 4 offers on that. And then our Dana Point properties that are set to close in a week, those have had multiple offers as well. So we're seeing anywhere from about 3 to 4 offers per listing along the coast.
Okay, so you're still seeing, that's pretty healthy offer activity.
Right.
It's not 1 or 2, it's 3 or 4. Where are these buyers coming from?
Well, we have a lot of 1031 exchanges.
Okay.
And then also, due to the cost segregation bonus depreciation ending at 100% this year, that's what's driving our market right now. So there's a lot of people that need for their income, for their tax income, to close by the end of this year.
Right, because it steps down from 100% bonus this year into 80%. And then it steps down further the year after.
Absolutely.
Gotcha.
So some people are still willing to pay those premier pricing right now to the end of the year so they can capture that.
Yep, I hear you. Okay. And then tell us about pricing. Like, what are cap rates? Borrowing right now, are investors borrowing in the 5s for their interest rates right now?
Right, so if they were to obtain a new loan right now, they're generally going to be about a 5.25 interest only, 5 years. And the LTVs aren't always great on the coast.
Yeah.
They're about a 40% loan to value. And due to the cap rates, we're always going to be low here, typically in the low 3 to mid 3s that we're seeing.
So are people today, are you seeing people pay cash for some of these assets more than they were before when they're getting debt more often when rates were lower?
Yeah, there's a lot of all cash buyers out there still, right? And then also, if people do need to obtain a loan, it's very minimal.
Yeah. What about pricing? Is any pricing softening? We have seen a little bit of dislocation because of these cap rates in various markets. It is a case by case basis, but are you seeing overall, like, top line softening in values along the coast?
Just a little bit, not too much, right? There's people who sell coastal products, they'll always get premier pricing, and maybe there's a little flex in their expectations, but there's never been those, like, necessarily the fire sales where we need to discount our properties 10-20% due to the fear of a recession, higher interest rates. That just typically has never happened along the coast.
And then the folks that are selling coastal assets, I mean, what are some of the reasons why they're selling? Are they trading up and out? Are they just getting out of the apartment business? Have that time's come? What's going on there?
Right, so our Dana Point properties right now that we have in escrow set in to close a week, that seller is going to be exchanging out of state into Arizona.
Okay.
He's going to be able to triple his unit count, and he's selling at actually a low 2% cap rate and then buying at a 5.5 cap rate. And we're able to put him in contact with our CBRE professionals in Arizona. And then our Carlsbad seller, who is 11-unit property out there, they want to exchange out of state and get into multifamily again and just double and triple their unit count.
Gotcha.
So they're leveling up. Everybody has a different taste, right? If you want to go from Central Orange County, North Orange County, move into the coast, that's your safe haven. People who've owned here for a long time and might be out of depreciation or almost running out of it, they're exchanging out of state and getting better cash flow.
Gotcha. And then what else do owners need to know right now? Anything, a lot of people watching the video are going to own multifamily real estate in SoCal.
Right.
Anything just overall that you think folks need to know about right now?
Right, so if you have a property and you don't want to sell for the foreseeable future, make sure you're up to date with rents, right? And if you can't do that yourself, hire a management company, and because rents are still premier along the coast. And then if you are looking to exchange, maybe look for an area where you can better your net operating income and improve on your unit mix. So those are the two things that I would recommend to people who are inactive and then also active in the multifamily market.
Gotcha. I agree. I mean, the home ownership along the coast has gone up and up and up,
right.
And especially with interest rates now 6-7%, wherever they are today, it's just eliminated a lot of people out of the buyer pool, and they've got to go back to renting. So the rental apartment market has stayed strong.
Right.
Buildings are full. Rental rates, you were just showing us a property in Huntington Beach that was fully renovated just by Pacific City, and it's a 2-bedroom, 1.5 bath townhouse that's going to rent for $3,900.
Right.
A lot of owners along the coast aren't getting $3,900 for their 2-bedroom, 1.5 bath townhouses, so they do have to keep up. And we can raise rents right now. A max allowable increase is 10%. So it's we got to be sensitive to not pushing too hard, but you got to keep your rents up, right?
Well, and I understand it too from an ownership's perspective that they're like, I've got great tenants. I don't want to increase their rent because I may or may not lose them if I do increase them. However, your utility costs are going up, your insurance costs are going up due to inflation. So you have to be cautious of that and stay up to market. Maybe you don't need to be, if you have a 2-bedroom townhouse, $3,900, but you should probably be fairly close to that.
And then what about renovations? So what we've seen along the coast, a lot of folks have came in and, like myself included, have fully gone in and top to bottom and gut renoed a unit and made it super nice, and you've got a big pop in rents. Are you seeing that today as much, or are people pulling back on some of the rents, the amount of increase, the CapEx spent? Are they kind of softening that?
What I'm seeing is if you do the premier renovations, right? And I'm in my mid-30s, colleagues of mine, we want just nice, safe places to live. And we're willing to pay up for those, right? And if you do the nice cabinetry, nice flooring, washer hookups inside your units, you paint it, just make it very nice and livable, people are able to pay for those rents. But then if you do just a so-so job and maybe put in 70% compared to that 100%, I don't know if you're able to get the rents that you anticipated.
Right, I gotcha. I mean, there's so much demand on the coast, and there's not a lot of really nice, clean product there. So if you have good product available and you've went that 100% or close to it, you're gonna get a great rental
like
rate.
anybody could put in just new appliances and then paint the cabinets, right? And then if you're asking for $3,900 for a 2-bedroom townhouse,
it's a little hodgepodge.
You're not going to get that, right? But if you do the full gut and everything the way that it should be, you have a very good chance of getting those rents.
What kind of properties are you excited about? What kind of do you recommend people to deploy capital in fourth quarter or wait? There's so much capital on the sideline. What do you recommend? What are you telling people?
What I like right now, what our seller did for 410 Huntington Street, he bought a 6-unit property. He found value to build an extra ADU unit. So then he had a 7-unit apartment complex, right? In Carlsbad, we have 11-unit property. There's potential to build an ADU there. So I like that where you, the owner and new buyer, not only can increase rents if you deem fear, but then also build an ADU and create value in your property and equity.
I mean, that is a really good point, because we've evaluated ADUs, and say you're building an ADU in North Orange County, right? It's pretty much the same cost as adding an ADU in Newport Beach or Huntington Beach or Carlsbad along the coast as the same cost it is to do in Anaheim or Santa Ana, for example, or Long Beach, parts of Long Beach. But your appreciation premium to do the ADU is much higher along the coast. So you got a fixed cost and you got way more upside. So it's more accretive to do that along the coast.
Right. Say, for instance, on 410 Huntington Street, for the ADU process, it costs around $150,000 for that ownership to build out, right?
Convert the garage.
Convert the garages, livable space, all the appliances, everything you need, all in $150,000. And then he was able to sell that on a price per unit base of $714,000.
Math works.
Math works. He tripled his math.
You don't have to be a rocket scientist to know that math makes sense. I think a lot of folks can get intimidated by the ADU process How grueling of a process is it? What have you heard?
Well, first and foremost, I would always recommend to hire ADU specialist, architect, right? We have some of those within our team that we can outsource. We can definitely put people in touch with those. So the process, if you do everything that is appropriate and with all the guidelines, and due to the state mandates, it is making it a little easier for investors to do that. So I would recommend doing it. For Newport, our 7-unit listing there, the ownership has approved 2 ADUs. So that's going to be, instead of for a new buyer, a 7-unit property, they could make it a 9-unit property.
I love that on paper. It makes a lot of sense, especially with the costs involved versus the appreciation. And we're still getting full value for the ADU, as you mentioned. Lenders are lending based on the income stream. They're not discounting that, and buyers are paying up for a legalized unit.
Right.
So it makes a lot of sense. But what about, a lot of feedback I'm hearing is like, well, I don't want to take away parking. I don't want to take away those garages. It's just like, I don't want to eliminate parking. It makes the most optimal sense to ADU a garage, the cost on a cost basis. But tell me about like parking. How do you overcome that? Do you do it on properties where you have abundant amount of parking?
Well, not necessarily. Like, for instance, our Laguna Beach property that we have listed, it's 8 units. There's only a 2-car garage there. All the cottages, people who they just park on the street, and they just got, for a 1-bedroom unit, $3,900 for a 1-bedroom, right? So yes, I think tenants really want right now nice livable area, and they want to have access to a washer and dryer in unit would be preferable. And
big.
Then just walking distance to attractions. If it's in Laguna Beach, walk downtown. Huntington Beach, walk to Pacific City Center, right? Newport, walk to the peninsula. So all those go. Parking is definitely amenity, but I don't think it's number 1 on their list.
And that is a good point. And that does speak a lot of volumes for what tenants are looking for. And then also too, some of these parking spaces along the coast, some of these buildings were built long time ago, and they were really small. You can't even get a car in there. So if it's not functionally usable as a garage, and more of a storage space, then that it makes even more sense to kind of eliminate the parking and to go to the unit route.
Yeah, to your point, in our 2 listings in Native Point, the tenants were just using those garages as storage. They park their car outside and on the street. So yes, parking is a nice amenity, but I don't think it's a must-have. And as an ownership, I think you're able to create the more value in building those ADUs. If I'm a buyer and I'm looking to buy a property and they have the ADUs, I want the seller to have those ADU plans by close of escrow. And if those are approved by the city, then I feel comfortable being a new buyer saying, okay, I can execute this even though I haven't done it before. I can hire the appropriate people.
How much work is that on the seller end though? Does that put a lot of weight on the seller then and responsibility?
Yeah, so for Newport, they're doing that, right? They took that responsibility, and then we have a listing in Costa Mesa where that ownership took that responsibility, and he's going with the city and then delivering by close of escrow.
So it's a nice plus that they go through that and give some transparency to the process. It's not going to happen every time,
right?
But that would be nice to have.
Yeah, absolutely.
Well, that gives us a lot to think about, and really appreciate your insights. We've closed a number of transactions led by you up and down the coast, and me and you are very long-term bullish about the coast.
Yeah.
And we believe it's to be a great place to focus and invest. So thank you so much for doing this.
Dan.
Really appreciate it. And we'll shoot another video soon. If you need anything, feel free to reach out to our team or contact Mike directly. Thanks so much for watching, and we'll see you on the next one.